Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and we're coming to you a day early because tomorrow is the Good Friday holiday. The stock market is closed, but we know we only get 2 days off as currency traders, and that is Christmas and New Year's. And if you trade crypto, you get 0 days off. It's never closed. So let's go ahead and jump into it. In this session, we're going to be talking about the news of the week. We're going to break down what's happening. We're going to go through all the currencies, score them from +3 to -3, and that's telling us where to go hunt.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We are literally 1 week away from our 15th annual Maverick Trading Summit. It's going to be really fun. If you're able to make it, great. But look, if you're not able to make it, and again, the topic is all about using AI to make you a better trader. What we are currently doing right now is we are currently making videos and some tutorials on basically everything we're going to be talking about in the summit. So if you're one of our traders and you can't make it to the summit, do not worry. The week after the summit, we will release all of the videos to where you can basically go through exactly what we talked about at the summit. So let's go ahead and jump into the market. All right, so I talked last week in the currency room how we just had this really big bottom with a spike in the VIX up to 40. And typically when that happens, that is and I'm going to use the term durable bottom. And last week I said, look, I think that is a bottom. I don't think it's the bottom, but I think it's a bottom. And for the most part, the markets have held in okay. That being said, we had one day where the market really got crushed, and that was when Fed Chairman Powell came out and basically said that the Trump tariffs were bigger than their worst case scenario. So that really rattled the market when basically even the Fed said, hey, they were worse than our wildest dreams. That's how bad they were. And because of that, Powell basically said, inflation is going to probably keep us at bay. We're not going to be able to cut rates. The markets did not like that, and we had a big fall. But look, there was really no follow through to that fall. I still think we're trading between 5,100 and 5,500 on the S&P. Granted, that is an 8% range. So there are going to still be big moves, but until we break out of that 8% range, there's really not going to be any major trend that we see in the equity markets. We are continuing to see the dollar sell off. And again, all these things, just like I talked about with Powell, is selling off and selling off. So we'll take a look at the dollar. We'll take a look at the bonds. It's definitely what is driving the market at this point. And we did have two central banks last week. We had the Bank of Canada that kept rates where they were. And then we had the ECB that cut rates as expected. And they're basically saying, we think we're good for now. We don't think there's going to be any more cuts in the near future. Let's take a look at the economic news. The UK claimant count change was much better than expected. Again, this is a good news for the UK, but then the very next day, they had weaker than expected inflation. So we actually saw a little bit of a run on Tuesday out of the pound, but then it really got wiped out by the weaker than expected CPI. We got a really weak report out of Canada on their inflation. Take a look at the expectations forecast for 0.7%, and it was 0.3%. The trimmed, which is like the core in the US, you trim out all the things that are really volatile. Supposed to be at 3, came in at 2.8. So look, this definitely had the CAD on the back hill. The CAD was very weak on Tuesday because of this report. We also got retail sales out of the US. Great report. Great report. And look, I also want to point out the US employment claims. This is why I am not getting too bearish in the equity markets, because there are some numbers in the US that are holding up really, really well. So we're looking at all these other numbers like consumer sentiment is just falling apart. And, we've got all this worry over the tariffs. But when we get the actual economic numbers, People are still spending. That retail sales report, that's a good report. The unemployment claims, we hear about all these layoffs, but then they don't show up in the numbers. So that's why I'm not willing to get more bearish in equities yet. Trust me, I want to. I love bear markets, but it's just not there yet. That being said, bearish dollar all day long. None of this stuff is great for the dollar. Then the last thing I want to talk about is this higher than expected inflation report out of New Zealand. The Kiwi was a decent performer for the week. So let's go ahead and take a look at all the numbers, and we'll go ahead and put this week to bed. Take a look at equities first. Equities we had down about 0.75%, but world equities were up for the week. This is what we're going to probably continue to see, is that the US markets, for the first time in years, are weaker than everyone else. Everyone else is actually doing pretty decent. The US markets are the ones that seem to be falling. Gold continues to be an absolute great trade to the upside. And if you take a look at why gold goes higher, economic uncertainty is one of them, falling dollar is another one of them, and rising inflation is another. That's got all three. That's why gold is making this big run. And until one of those changes, I don't see any reason why gold doesn't keep running. Look, it's going to be done at some point, but in the near future, I just don't see anything that's really going to keep gold from going at least sideways to higher. Let's take a look at the S&P chart. We did get a good bounce. Again, this is a good bounce. If you go back and look at the volume on this chart, we hadn't seen volume like these 4 or 5 days since about 2022. And it was on one of those big bottoms that we got that kind of volume. So this was good volume, a VIX spike above 40, but here's the problem. It is not bullish at all. There's nothing bullish in this chart. The only thing that bulls can basically be hopeful about is, hey, we didn't rally up and then fall to new lows. That's like the most bullish thing you can say about this market, is it's at least held up. But none of these candles are telling me that there's a significant amount of buying that's coming into this market. In fact, this looks like it's just barely holding on. And then if there's any bad news that comes out, we're going to make another leg lower. So I am not bullish here at all in this market. And I run into traders every now and then that are bullish. And I'm like, what are you smoking? Because I want some of that. But I also talk to some of our traders that are so bearish that is crazy. And I'm like, hey, look, we might get there, but right here, right now, I think the market is between 5,100 and 5,500. I think this is the range right here. We're going to be in this range. Anka, what's your call here on equities?
Hey, Rob. Well, I would definitely agree with you. And I think this is one of the conversation I was having with one of our traders. And it's the exact same thing that, this is not one of those robust like rebounds. We've seen those rebounds that like a lot of numbers right now we're seeing in the dollar and other currencies, like they go date back to like 2022. And we had a nice like a bottom in like November 2022 and I had a massive rally off of that. This is not looking like that. This is, the fact that we haven't broken out above the previous high that we had on that massive reversal candle, I think is just a sign of worrisome here. So I think that this is just a typical bear rally. We even in the currency markets, we haven't seen a massive reversal in like yen or Swiss franc. Like we are not seeing that massive reversal sort of strategy. Just like we saw last year in July, August, and we saw a nice recovery off of that. This is not turning out to be that. So I think this is where you got to be a little cautious. As long as we stay below the 20, the 50-day moving average, this is still a downtrend. We're still making a lower high, which will then, can easily retest that low. But I think I'm on board with you, Rob. Like, I think we'll probably go sideways till we start to see negative data. And that data will be the next catalyst. But till then, we can kind of drift sideways, couple of up days, couple of down days. Just like yesterday, we had a down day, but then we're seeing a bit of recovery today. So there's a lot of back and forth that I would expect. But yeah, this is not the markets that are bottoming it out and making highs. So I'm on board with you, Rob.
Yeah, so a sideways market here with a big range, but the risk still to the downside. You and I are completely in lockstep on this. Now, this is what I really wanted to talk about this week, is because we had a down week in equities and we had some softness, but this is like opposite of what you typically should have seen. And especially Swiss franc and euro have been the currencies of safety. Typically, it's the dollar, the yen, and the Swiss franc. And right now, the dollar and yen are just doing their own thing. They're pretty much just not acting as currencies of safety. The euro and Swiss franc have been the currencies of safety, and then all of these have been the growth currencies. Take a look at this week. We had really nice movement on a risk on move in the Forex market. And so that's why, again, I'm not getting overly bearish on equities, because when I look at the Forex market, it's actually showing me that people are wanting to go out and buy Aussie and Kiwi and CAD. They don't do that when they're scared. And we are starting to get some sell off in the euro and Swiss franc. Like I said, I am not bullish in any way, shape, or form, but all the things that I look at to determine if the market's ready to crash and go down. Oh, one thing I want to make a correction here. This should have been negative 0.7. So CAD was actually down for the week. CAD was down on that very weak CPI report. But again, this Kiwi, just a great number. Aussie, they were really good trades across the board, pairing up growth currencies like Aussie, Kiwi, and pound against euro, Swiss franc, and even the dollar. That right there is a good trade as long as these markets hold on. But as Anka and I both believe that it's just barely holding on. If it does slip and fall, we're going to get the exact opposite, where we're going to get Swiss franc and euro are probably going to be the best performers, and Aussie and Kiwi will absolutely roll over. But until then, I think you want to stick with what's working. Here is an up week as well for the most part, but we're going to take a look at the charts. It's not a great week. Nothing happened really on the charts to show us that any trend has changed. So we've taken a look at the numbers. We've taken a look at the equity markets. Let's take a look at the bond market. And we did get a little bit of a break here. We ran up to 4.6. We pulled back down to the middle of the range. And we're basically where we were, just a month ago. If we start to creep back up into here, I'm telling you, the equity market is toast. The equity market, if we go back up to 4.6, we will see another big fall in the equity market. There's no doubt about it. If we creep down, back down into this low fours, I think the equity market might actually be able to break out of the top side of that range. We are completely beholden to US debt markets at this point. If you really want to look at the forward indicator of where equities are going, where currencies are going, where everything's going, watch those bond yields. Right now, they're pretty neutral, which is why I'm also pretty neutral as well. Here's the crypto basket. And here, look, it's not the worst. Again, we hit new lows, and then we came back, and you can see we've just not really done anything. There's no bullishness. There's absolutely no bullishness here on this chart. So I am not looking at cryptos at all on the bullish side. Next week, we don't have a ton of news here. We've got European PMIs. That's really about it. Some retail sales on Friday. So look, this is a Easter week. We don't have a lot of news. The tariffs are still the big news out there. We're probably not going to hear anything on tariffs. They probably haven't had enough time to make negotiations. Right now, they're trying to negotiate with separate companies or separate countries to maybe give exceptions. Supposedly, Japan is the first one they've met with to talk about possible exemptions. We're probably not going to hear about any deals until probably into May. So again, I think we're at a sideways market, but I really do like the trade that worked last week, which is Aussie, Kiwi, and pound against the euro and Swiss franc. I think that is the trade I'm going to continue to watch. But let's go ahead and score everything from +3 to -3 and make sure that that is where the market's telling us to go hunt. I'll go through cryptos here, Anka. You can go through Forex. Take a look at Bitcoin. It's trying to do something. It's trying, boy. In downtrend, falling, and now we're right up against that last high. and it hasn't turned down and sold off. It's trying desperately to break out, but until it does, I'm not interested. I need to see the moving averages sloping higher. That's at least 3-4 weeks away if we get a rally. So I just can't get excited about any crypto here. Bitcoin Cash is even a little bit better. Okay, we poked our head out above it, got slapped down twice, but we're holding this area right here until I get this one's a little further along. Do you see the moving averages are starting to flatten out? They're starting to curl higher. Once this red line can cross above the yellow line, the 20 by the 50, then I can get more bullish. But until that happens, on the sideline. Ethereum is a no touch. No one should be looking at this. No one should be touching it. It's terrible. It's terrible. You can see still very bearish, and really same with Litecoin. So even if you are looking at crypto, Bitcoin Cash, Bitcoin, and they're still too far away to trade. So for me, I am just completely not looking at crypto. I'll check back in when things look a little bit better. Okay, run us through the Forex, please.
Absolutely. Well, let's just start with the good almighty dollar. And I must say that this is a very stubborn, one-sided trade. I mean, we went from, whole sideways market in March to then, now a very one-sided move. This one is, I had a lot of questions from traders, it's like you're trying to make sense of the move. And this one, I think, other than the fact that, we're seeing money leaving the U.S. and going in other countries. I think that's the only explanation for that. But outside of that, the Fed has stayed, more on the grounds as they're not looking to cut rates. Their bar to cut rates is pretty high. The bond market is holding steady, but this one has its own underlying weakness. And I must say that this is the biggest drop that we've seen since 2022. And that was the end of 2022 when we had seen a massive bottom in the market. So the dollar, it seems like it's doing its own thing, and this is one of those situations where you just want to follow that momentum, and you can see it on a 4-hour chart that the slope, the 13 EMAs just continues to drop and drop and drop. So until the momentum is over, we will see that where it just started to break a new high. I think until then, this probably continue sort of chipping lower. I think there's just the trend is a -3, and this is where every little rally, we had it one strong day this week, and that got sold pretty quickly. And dollar is not really acting as a safe currency, so there's not a whole lot going for the dollar here. So, dollar looks extended, but be cautious on if you just remain short. But when the momentum is over, you want to just get out. But so far, there's no change in the outlook for the dollar.
Ankit, you said
On the other
something.
hand, we had
Ankit, you said something that was so perfect, and I wanted to highlight it. You said there wasn't really any big news other than people not wanting to be in U.S. investments any longer. That is a huge story, and just think about our partners over in Europe, our partners in Canada, our partners in Asia, people that we trade with. They are trying to not do trade with us. I've seen lots of reports about tourism. Tourism, especially from Canada and Europe, is down substantially. That's all money flows. Businesses who say, hey, let's not open up a new place in Europe, let's go to other places. Or people that, hey, said, I've read a lot about Canadians who said, I'm no longer investing in US companies. I'm going over to other countries. We're seeing that, and that is the story here. And that's why I believe this dollar trade has more to go, because it's not like everyone unwound that last month and then they're very happy with the US at this point. No, that's not what it is. It's going to be a thing, and that's why we're seeing US equities down, world equities higher. That is the driving force of this trade. Now look, as Ankit said, it's going to be momentum down, momentum up. As traders, we're going to try to catch that. But I think the overall viewpoint on dollar is it's likely to go lower.
I agree. That's a good point there. Let's go with the yen. Now, you can see that yen is just consolidating here. Now, yen is not spiking higher, and yen is not spiking lower. And I found it surprising here because, like yesterday, equity markets are down like 3%. the yen didn't really act much on it. So at this point, it doesn't seem like a great long or short. I think this is just going sideways in the consolidation way. But just keep that in mind that this is not in a downtrend. So while you see a consolidation, does that mean that I should just start shorting the yen? I think just expect a little back and forth price action. But as far as the trend goes, it's still a +2. But I think for the next foreseeable future, I think it just probably goes drift sideways a little bit. So don't really love the yen here to go buy or even short. Now, Swiss franc is the one that I was definitely a little bit more looking forward to because this is the currency that outperformed like across the board during this time of uncertainty. So the faster it goes up, the faster it comes down. But I must say that this week it was a volatile week because even though the Swiss franc did come down, there were a couple of days where it just massively reversed those losses. So there's a lot of back and forth, and I must say that this was not an easy short, even though it's down for the week. Now, if you take a look at trend and the velocities, you can see that's just going in the opposite way. So this is where, if you're trading the trend, then not the right time to jump in. If you're trading the velocity, I think I can see that there's that little short-term momentum that continues to kind of pull on the downside. And as long as the market's holding steady, I think we'll see a little bit more further pullback in the Swiss franc here. But again, remember, this is the one that is a bit more volatile. Now, on the other hand, euro is the one that we look at, and this thing kind of looks similar to the Japanese yen, sideways. It's above the 20 and the 50, not spiking higher or lower. Even today, we had the ECB rate cut. You kind of see that in the price action. It didn't seem to really affect the momentum as much. So on the shorter term, we're seeing the velocity kind of drifting sideways. But this is one, like if you look at the range on the daily chart, I don't really love it as a long or as a short. Now, if I go into the British pound, this is the one that I can say that maybe this is more making sense as a short because it's below the 20, below the 50. We did rally, as you can see that we had a pretty nice bearish engulfing handle, and we are now back lower again. So this one, again, from a technical standpoint, I like it more further to the downside than I do, compared to the euro or the other currencies. So I think this is the time maybe we'll probably see more underperformance in currencies like the British pound. So I think it's worth taking a look at some pound pairs. Now, the Canadian dollar is the one that, they didn't cut rates, but at the same time, it's not the one that's really, rallying off that either. This thing did come back lower today, this week, and I think at this point, it looked a lot better last week than it does look good over here. It's below the 20 to 50 moving average, probably drift sideways here. I don't love the CAD here on the long side, but at the same time, it doesn't seem like it's falling apart either. I think it probably stays sideways to a little bit weak. Now, if you take a look at growth currencies like the Aussie, and so here's the one that typically would have a nice bottom as a market bottom. As you can see that we had the massive candlestick last week on that reversal, so we're pretty much drifting sideways since then. We haven't really broken out, and this chart, I think it looks more like the S&P that hasn't really broken above the 20 to 50. I think this has a lot to do with the tariffs and the China. And again, we haven't seen any development or improvement this week. So I think until that is resolved, that probably will put a pressure on the Aussie. But I think if we see any development out of China or any sort of trade deal coming through or exemption coming through, I think this thing can easily take off. So I think this is more related to the news that you gotta be watching for here. But as far as the price action goes, I don't really love going long here. So that leads us to only currency that was really looking good on the long side, and that's the Kiwi. And just to kind of give a context of this Kiwi move, this was the biggest Kiwi move since October 2022. So it's remarkable how quickly we have come up, and you can see we are up above that 20 to 50 moving average. Now we are running into that overhead resistance, so I think we probably just take a little pause over here. But this thing, was surprising because it wasn't a broad-based rally this week. It was very isolated into this Kiwi here. So would this continue next week? I think we'll just continue watching that velocity score. So far, you can see that velocity score is holding. It's above that sloping 13 EMA. So as long as it stays above, I think the momentum is there. If that velocity dips below, I think we'll probably see a little short-term top on that Kiwi here. But you can't deny the relative strength here. And this is the only thing that actually looks the best here on a technical basis.
And I want to talk a little bit about Kiwi. that, we've seen some recent developments with Kiwi. First off, they've been in recession for the last 6 months. They are officially out of a recession. They've officially come out. Look, that doesn't mean that it's great, but they're no longer in a recession. So during that recession, the Kiwi just fell and fell and fell and fell. And now it's like, okay, things aren't terrible anymore. They're just so. That inflation report that came out this week really changed things because, okay, they're seeing inflation. Is that going to cause? Is it coming from inflation, or is it coming from there's actually good economic activity going on? And that's for the market. That's what the market's trying to decide here. So I like the Kiwi on the long side. If you take a look at it over the last year or two, it's got a lot of ground to recover if the economy is actually recovering. So here's where we are in our trend scores. We've got Euro, Swiss franc, absolutely the strongest ones. And the weakest here, we've got US, Aussie, CAD. This is like the long-term trade where if this market goes down more, I think this board probably holds in really well. This Kiwi probably doesn't. If we roll over in equities, this Kiwi probably falls down to the bottom. But I like this board here for market weakness. Let's say the market stays stubbornly strong. It's telling me, hey, this Kiwi really has some more room to go. And I think you can be short against the Aussie. Short against the dollar. And I think this Aussie could move up to become better. So really, there's some good opportunities here, even in this sideways market. Here's the problem. When we go into velocities, nothing's real great. Kiwi's right on the edge of being strong. Swiss franc right now, weak. So look, we can still make some trades. I do like this trade right here. Swiss franc against the Kiwi. I do like that at the first part of this week. Other than that, I think the next big trade is if and when the equity markets roll over. I think you get back on board with long euro and you play it against pretty much everything else. Let's go ahead and take a look at some potential pairs here. Let's go ahead and start off with this Kiwi Swiss franc. And this is what I was talking about. Let's go back to a year ago. We're up at 56. We dropped all the way down to 46. That's 20 cents on a 60-cent currency. On a 50-cent. That's a huge move. That's like, what is that, 15, 20% in a currency? That's an enormous move. We have room to come back. If the economy in New Zealand is actually coming back, I don't see any reason why we can't easily get back up into this area. Now, this is 50. Right now, we're at 40, almost 49. That's 100 pips. That is a 2% move. That's a 2% move from here. And I really like this on a 4-hour chart. Take a look at this price action we're seeing on a 4-hour chart. We had this little wedge forming. We broke out above it. I really like this to go up into this 50 range. Now, for this to happen, equities have to hold on. I don't think equities have to go higher. They just have to hold on. If equities roll over and die, then the Swiss franc is going to spike again, and the Kiwi's not the place to be. This is the trade I like. I like this trade only for like the first part of next week. After that, I think the best thing to do is to wait for these equity markets to roll over and then get back on board long euro, long Swiss franc, and maybe even long yen at that point against everything else. Okay, what do you want to take a look at?
Yeah, Rob, the only other pair that I really like here was the first one was the pound Kiwi. Going back to the exact same sort of idea, relative strength of weakness. This thing is also coming up nicely, and you can see that we are now officially broken that 20 and the 50-day moving average. And you can see that this thing has not broken that level for quite some time. So at this point, again, looks extended to me, but at the same time, we're looking for bases and bounces. Again, this is a continuation pattern. So right now it's sliding lower, but I think this is the one that worth taking a look at. So I do like the way things have shifted in the pound. So maybe worth taking a look at it. But I think you're absolutely right. Like this a lot of this outlook kind of hinges on what the broader market do. And with the holiday tomorrow, I think we won't find out till like next week. And and this could be again headline based, where if there's a development out of the kind of situation, maybe we'll see a further move in the Aussie and the Kiwi. But if we see a resumption of that down move, then I think this move can easily be sold as well, because in the grand scheme of things, these are still like the Kiwi move is still like a bit of a bear rally. So I think next week we could see some maybe short-term pullback, or maybe some consolidation before we can see another like higher in the Kiwi. So that's the one that I'm watching. But outside of that, I think if you look at any dollar pairs, Rob, like I think they're all kind of very extended. Dollar, you can even take a look at dollar yen. They're all very extended. They're all kind of moving lower. So question is that, does the dollar continue to sell here? And I think that's really comes down to, as you can see that we are hitting that very key support that we held in last year. Remember this whole carry trade unwind, and dollar yen, did tested that level twice before having a massive rally. We're getting close to that level. So the real question is, you know, is this where dollar is going to really make a big turn to the downside? I think you got to watch out that level on that. As long as that level holds, then we probably see a shorter term pause in that dollar move. But I like the dollar, but I think from a risk to reward perspective, I think dollar looks very extended to me here. So I think I'm more on the sideline here till I really start to see a better price action.
Thanks, Ong. Let's go ahead and wrap this up. So we've got 1.5 weeks left in April. I think it's going to be an okay market to trade. I think you could absolutely be moderately active. I think it's going to be a decent market, just like it was this week. It was a decent market this week. There was definitely some pips to be made. And for the first time, Forex looks better than equity trading. I really do believe in that. And I'm actually more active in Forex than I am in equities, which is usually the other way around. Thanks for joining us, everyone. Have a great long weekend. Happy Easter. Happy Passover. Happy Good Friday, everyone. Goodbye.